gosh, it's a dark, dark, dark day in the market. I'm just being swallowed up. I'm moving like Jonah right now, just been swallowed up by the whale. The stock market is the whale. I'm Jonah, my money's Jonah. And listen, I just done a round of investing today. And prior to the round, actually, I'm not even going to give you the figures. You have to stay tuned for tomorrow's portfolio update. But put it this way, I just lost a whole bunch of money investing, not trading, because the market right now is taking a bit of a downturn, and I'm going to talk about it why. So if you want to know why the market is going down, please like, subscribe. I don't even know what my intro is like. I'm just stunned. I'm just stunned. Just like, comment, subscribe, help the channel get to 4K subscribers, so we can get the world of investing out to more people in a clear, simple, and transparent manner. I'm going to talk about the factors that is contributing to the market decline, particularly within the UK and the Eurozone. What to expect, which a lot of it I did mention in my last week's portfolio update anyway, so hopefully it shouldn't be too much of a surprise. But obviously it does hurt when it actually still starts to happen. So the first article I'm going to read is from City AM. British FTSE 100. British? Wow. I'm really hurt. Britain's FTSE 100 has fallen sharply after two people tested positive for coronavirus in the UK, and the pound rose following the Bank of England's decision to hold interest rates yesterday. So you guys, I've got videos on this. I'll put the link in the description. When the pound rises or when the pound is strong, the stocks tend to have an adverse effect, particularly from a UK equity standpoint. And if you want to know why, the link will be in the description, which will explain all about how that works. So Professor Chris Whitty said the cases should not cause undue alarm because for the majority of those who contract the virus, the outcome will be a mild respiratory illness from which they will recover. Thank goodness. European stock markets, turn that off, also fell after data showed the Eurozone grew at its slowest rate in 6 years. In 2019, US shares followed them downwards. The FTSE 100 was down 1.3% by 3:45 p.m. Germany's DAX was down 1.1% lower. France's CAC 40 was down 1%, and the Pan-European Euronext 100 has shed 0.9%. In the US, S&P 500 had dropped 1.1%. The Dow Jones was down 1.3%, and the Nasdaq was 0.9% lower. And then it talks more about the coronavirus in question. Now, I'm now on the Telegraph, which basically says the FTSE 100 fell to a 7-week low today as stocks across Europe all tumbled amidst health fears. This coronavirus situation is acting, or is causing the market to react in very, very unpredictable ways. And that's something to be mindful of when there is going to be other situations like this going forward. When there's more economic related situations, such as, say, trade wars, you will see the market negatively react, but at least it's predictable. And it's predictable because obviously you can easily say that, okay, if there's going to be a restriction or an increase in exporting from China, then obviously you can see. Now, I did explain in my previous coronavirus video why the coronavirus is going to have such an impact, but the unpredictability comes from the simple fact that you don't know where next in the world globally new cases are going to be contracted, and you don't know where in the world globally more people are unfortunately going to be affected. And that level of unpredictability is a bit kind of like whack-a-mole almost, and so that's where you're going to see different patches of volatility in different areas, across the globe. So depending on what type of stocks you hold, I might be okay one week, whereas you might be down, and the next week it could be in complete reverse. So it's something to definitely be mindful of until this thing is, discovered and stamped out and gone forever. It's going to be probably quite volatile for the next potentially few months if you relate it to the SARS epidemic. Now, the FTSE 100 fell to a 7-week low today as stocks across Europe all tumbled amidst health fears. 2 people in the UK have now been tested positive for coronavirus, which adds to the weight to the World Health Organization global emergency stance. The benchmark index ended 1.39% lower to 7279.65, also affected by a stronger pound, which we just spoke about, while the FTSE 250 dropped 0.61% lower to 21,162.93. In the Eurozone, the DAX and the CAC both slumped 1.33% and 1.11% respectively. I'm on The Guardian. Britain's economy is close to a turning point as the country prepares to formally leave the EU after almost half a century of membership, according to a Guardian analysis of economic news over the past month. So one of the factors that I think is causing the markets to be going down right now and causing this level of volatility, particularly in the UK, is today is Brexit day. So someone in the comments in my previous video asked me, how do I feel about this Brexit situation and what do I think is potentially going to happen. And I think there's going to be a bit of uncertainty for the next couple of weeks, maybe a month or so forth. Then it'll probably stabilize, then fundamental data, then earnings, then all of the good stuff will start to actually, be the things that people focus on, unless there's some other stuff that's going to be unforeseen that we don't know about. But obviously, the actual end date, the end date's today. The end date is today, but we still have negotiations in terms of, what it really looks like in terms of trade and other factors right up until the end of the year. So I think there's still going to be headlines that come out which will cause the market to react. So personally speaking, hate to be the bearer of bad news, but I would say it's not over. It's not over in terms of the volatility or the reaction to, the Brexit situation. The negotiations are still happening. It is official and it's happened today. However, the actual negotiations will still happen up until the end of the year, whereby things will be agreed in terms of how does trade work between the two nations. How do people, fly in and travel in between Europe, and what the rules and regulations on that. And those things will have an impact on the economy overall as well. More than 3.5 years after voting to leave, the UK will formally depart on Friday. It's been that long. Brexit has been 3.5 years. Amazing. With the bloody hell. If I can't say economy, then I need to just wrap this up. With the economy close to stalling point following repeated cliff edge deadlines and intense political uncertainty over the country's future trading relationships with the EU and other countries, in the Guardian's final Brexit watch before the exit date, warning lights are flashing with zero growth forecasts for the final 3 months of 2019. So the final 3 months is zero growth forecasts. When the next GDP figures come out, we shall see. But obviously, if there is one quarter of negative growth or decline, then we need a second one for there to be a recession. Amidst intense political uncertainty rounding off the worst year for growth outside of a recession since the Second World War. Let me read that sentence again so it's clear. In the Guardian's final Brexit watch before the exit date, warning lights are flashing with zero growth forecast for the final 3 months of 2019 amid intense political uncertainty rounding off the worst year for growth outside of a recession since the Second World War. So at the moment, for the UK specifically, 2019 was the worst year for growth within the UK outside of a recession since 1939 to 1945, mate. Speculation has been rising that the Bank of England will cut interest rates on Thursday to reboot growth on the eve of even the EU. Cut interest rates. What are we at now? Are we at 0.5, 0.25? I need to go check what we're at in terms of interest rates, but I don't know how much more they can be potentially cut. It might even go into negative interest rate. Imagine that. Now I'm reading this from MarketWatch. UK stocks fell on Friday as the pound pressured higher on a day that will mark the country's official exit from the European Union. So here it talks about the pound and it talks about Brexit. So what I'm saying is there's a volatile cocktail of factors that's causing the UK market to be down. You've got the coronavirus, you've got the pound, you've got Brexit. You've got the really three very strong and very different economic and obviously more global and geopolitical situations that are causing the UK market to be down right now, and causing a big drop in stock valuations and stock prices. There were also more coronavirus worries for investors as the country confirmed its 2 cases. The pound, GBP, USD plus 6.874% rose 0.7% to $1.3187, while the FTSE 100 dropped 1.3% to 7286.01. Listen, if you are new to the channel and you are wondering how can the pound go up and stocks go down, I don't get it. I don't understand. I have a video. The link is in the description. Please go and watch it. It will help you, honestly speaking, because it's really, really important to know that there is a correlation between pound prices or the valuation of the pound, the valuation of currencies versus the valuation of stocks. And then where, depending on where you're investing, what side of the coin you potentially are on and how that potentially benefits you. Sometimes when the pound goes up, it might benefit you in one way because maybe you've got more foreign investments. Sometimes when the pound goes down, it might, the other way around, and so forth and so forth. So it's something to bear in mind. The index dropped 3.95% for a week, the worst period since early October 2018. A strong pound can weigh on UK exporters as it makes their products less competitive in foreign markets. Okay, it's a bit of a spoiler alert for my video, but whatever. Helping the pound on Friday was also the Bank of England's decision yesterday not to cut interest rates, giving another vote of support to the UK economy, said some guy at AJ Bell. The big issues to consider near term are the impact of the coronavirus and developments of trade talks. Both will be watched closely by the markets and could result in volatile share price movements, he said, which is what I said last week as well. Listen, this next few months, I think February is going to be very, very volatile. And, you know, I've been in this position before. There was a video that I'd done probably about 6 months ago where I think I put £500 into investments, not trading. And it evaporated. It's just condensation, just pure condensation from my money, like currency condensation. That's what I call it. Like it just disappeared. Harry Pottered. My money Harry Pottered. Just vamoosh. That's not even Harry Potter, but whatever. Alakazam, whatever Harry Potter says to disappear things, that's what happened to my money, basically. And it's really, really important that when those types of situations start to occur, you have cash on hand and you are ready for a buying opportunity. Listen, I like to try and end on a positive. When stocks are down and it's for macroeconomic factors, it's for external factors, not to do with the fundamentals of the business, then, you know, that is definitely an opportunity to deploy some capital, to deploy some cash reserves, buy some shares that are cheap, get more shares for your money, and hopefully obviously get a better return. If you are a dividend investor, it's a perfect time to be loading up so that you're getting a lot more shares, and then when the next dividend gets announced, then obviously you're getting a lot more of a dividend payment for the shares that you currently hold. And obviously if you're a growth investor, then obviously you're going to expect some capital gains anyway. So listen, at the end of the day, you can make money going up or down in the stock market, and the wise thing to remember is that when the market is going down, not to panic and not to be fearful and not to just jump ship and sell everything, but actually just to take some time to analyze why the market is going down. It's really important. Is it your stocks? Is it your stock picks? Is there something fundamentally wrong with your business where you should potentially sell? Or is it macroeconomic? And if it's macroeconomic, then you know that it's probably going to bounce back eventually. And obviously, you know, use this as an opportunity to potentially buy more. There is going to be times when there's actually something wrong with the stock. That will happen. And in those situations, then obviously it might be more prudent to sell, get rid, and redeploy your capital elsewhere. However, in times like this where you've got coronavirus, who could have predicted that? No one in 2019 was thinking about, oh, I wonder if there's going to be a health epidemic at some point in 2020. No, not one individual thought there's going to be this. So you can never prepare for this. You can only react when things like this happen. Obviously the Brexit situation was a little bit more of a known. However, we saw what happened when Boris Johnson was confirmed as the Prime Minister. So again, you can see some contradicting factors here. We've got the Brexit situation potentially causing stocks to go down, but then you've got the fact that when Boris Johnson was put as Prime Minister, stocks went up. So obviously if he's the guy that's going to take us through this transition period, then actually there's a lot of confidence from a UK standpoint, from a population standpoint, in his economic ability to do so. So from that standpoint, then I think there should be a lot of confidence that things will bounce back eventually, and, you know, things shouldn't be, you know, really there to worry about from that standpoint. So it's definitely going to be very, very interesting. We've had a lot of earnings updates this week, and a lot of companies have done really, really well. So it is a shame that, you know, this is now putting the pressure down on stocks when companies are doing well. But I always like to say that for me, the bottom line with investing is always the fundamentals. I know that the macroeconomic factors, I know that the hype, the hysteria, the momentum, all of those factors cause stocks to just move in very, very unpredictable ways sometimes, and sometimes maybe surge beyond valuations, or actually decrease beyond what their fundamentals should say they should decrease by. However, I think ultimately fundamentals will win at the end of the day, and if you do buy good, safe companies, you'll be fine. Tomorrow's update is good. I've got 2 socks that I've sold. I've got 2 socks that Let me do that. I mean, I have sold some socks back in the day. I'm joking. I haven't sold no socks. I've got 2 stocks that I've sold, not socks. Although I should maybe start selling stocks. Maybe Infinite Investor Flight stocks will come soon. Check them out. And I've got 2 new stocks that I've bought as well. So there's been a lot of movement within my portfolio. Not to mention the fact that, you know, the whale just came and just swallowed up my money. But it is what it is. This is why we're in the market. Listen, like, comment, subscribe. If you've got any questions about coronavirus, about interest rates, about the pound, about Brexit, get in the comments, leave a comment, and I'll be sure to respond as quickly as possible. Tomorrow there'll be another portfolio update. Be sure to check that out, and have a great weekend. And last but not least, happy investing.